What is up, trading family? I want to tell you a little story about a trader named Jake. Jake has been trading for 2 years, wins here, losses. His losses seem to always outweigh his wins though, and he's ready to call it in. He's done. He feels like he's committed, he's given his best shot. Maybe trading isn't for him. But then one day he's digging around in the forums, right? He's still in the trading world and he finds some tips. And these tips are the game changer for him. And I'm gonna share with you today 7 trading tips that saved Jake and that could be the change in performance for you as well. If you're new here, my name is Forrest. I invest in stuff. I'm a day trader. I'm a long-term investor. Been trading for about 8 years, have a background. Started my career working at a retail brokerage, getting my securities licenses, which have nothing to do with trading, but then getting deeper into finance and trading and things like that. I've made over 7 figures in the markets, multiple 7 figures at this time, not all within 1 year, some within 1 year. I've lost a ton of money. And at this point in my trading career, I'm super hyper focused on teaching people and being consistent. Consistency as a day trader, having edge that is repeatable is the most important thing, right? So let's run through my 7 day trading tips. Also subscribe. Also check out the stew. This is a studio, yeah. When you become good enough as a trader, you can get your own studio as well. So this first tip is for all you chasers out there. Don't trade the news, trade the reaction to the news. You should have a system, right, that includes some level of technicals and volume analysis. Now, news is just a catalyst to move the market where it was already going to go. You have to remember that the market is a collection of people trying to make a prediction about the future, either long or short, right? So if you're trading futures, even if you're trading equities, whatever it is, people are betting on the upside or the downside, and the moves just provides an injection of liquidity really, really fast, which is just fast forwarding the market. So instead of chasing, right, if you didn't already have a thesis, getting into the news move, process it, wait, take a little bit, and you know I'm right because how many times had you just waited maybe 30 minutes or an hour after a news event, there would have been another major pivot in the day that you would have captured much more easily than if you were jumping in 1 or 2 minutes right after the news. So this is my second tip. Here's a chart right here, right? Now, you're looking at it and you have some thesis, but what do you feel about your thesis if you flip this thing upside down? Well, it flipped on me. But in TradingView, you can press Alt-I if you're on the computer or find the hotkey on mobile. Flipping your chart upside down is going to change your perspective. And just like in real life, where you're standing and what you know is going to determine what you think. And flipping your chart over could be the secret edge that you need to refining your thesis. Why is this so important? A lot of people wake up in the day and have an upwards or downwards expectation for the day. And have you ever been in a situation where you take a long, you get stopped out, you take a long, you get stopped out, you take a short, you get stopped out, you take a short, you get stopped out, right? You're chasing that bias that you had in the morning instead of looking at the market for what it is. So flip your chart upside down and ask yourself, would I still take the same trade even though I'm looking at the market from this new angle? Now, this third tip is critical. Lever down. Guys, you need to trade lower leverage. If you're right, you'll make money just the same. So many of you are trying to make life-changing money in one single trade, but here's the thing, you can change your life a little bit every single day. Stop trying to change it all at once. Instead of trading 10 NQ, go down to 1 NQ, go down to 1 MQ, right? Instead of trading 5K in every options position that you're taking, trade 500 bucks. If you're right about that 10 bagger, your $500 will turn into 5K, and you'll do that over and over again. And now you have 50K regardless, risking a very small amount of capital instead of losing 5K over and over again. If you're a brand new trader and you don't understand that trading is all about risk management first and foremost, you're gonna have a bad time. Tip number 4, open interest. Now, if you're not an options trader, this might seem really, really far away from you, but equities and options are a very, very inefficient market, right? There's a lot of pricing discovery and every single strike can become its own market or at least provide insights into the edges in the day. For example, if you're an index futures trader like I am, I also trade options, and I noticed that the market is coming up to a price maybe on ES futures, 6,100, and there's a ton of resistance there, but I'm not seeing much confluence on the charts. But then I go and look over at SPX and I see that the relative same price on SPX, that strike has a ton of open interest. And if the market moves up, if both indices move up even just a few more points, all of those strikes would go in the money. Now, I still have to account for time of day and things like that, but the point is that the option chain is giving me an additional level of insight into the edges in the market. And with my system, I care a lot about volume, right? options have volume, right? There is a market there. So it's important to understand and have a full view of the totality of the market and the things that can affect the trades that you are in. Tip number 5 that'll help you stay alive. I just made that up. Time of the day. Okay, you have to ask yourself, if you thought that the market was gonna hit a level by 10 a.m. and it is now 12:30 and it still hasn't hit that price, should you still be in the trade? Now, maybe it hasn't hit your stop yet, but you might think about adding a time-based stop. That is what this tip is. You need to constrain or define your trades within some window of time if that was your initial thesis. Now, caveat here, as discretionary traders, right, discretion is our superpower, something I always say if you're in my Discord. Discretion is our superpower. Using our ability to reason about the market and process new information is our superpower. So if you update your thesis, and if you actually have a practice of saying, oh, I see this, I'm gonna write it down, update my thesis, do that. What you don't need to do is hope and pray. If you're ever sitting in a trade and like, oh, I think, I hope it might, right? If that is the predicate, I don't know if that's the right word, but if that is the beginning of your thought process, close the trade. You should only be in trades that you're certain about, and if the trade hits, write it down, take notes, journal. You should be tracking every single thing that you do in the markets anyways. Tip number 6, stop focusing so much on indicators. So many of you guys are basically astrologists, right? I look at all of these theses from people online. They've got lines all over the place. It's one of the things that annoys me the most when people come to my Discord. You guys share a chart and you have 100 lines and you swear you need the lines, but at the same time you're asking questions because you don't understand what's happening. Make it make sense. It's like, it's so obvious. I'm actually getting frustrated recording this, thinking about the amount of times that I've had this conversation. You need to get your chart down to like 1, 2, 3 indicators tops. It doesn't even have to be the same ones that I use, but I promise you that having a ton of indicators is a sign, it is a smell, I'm coming from the programming world, but it's a smell of a bad system, because a good system is very, very simple. There are only a few key things that you should be looking for in the market, because most times the market is all moving in lockstep. Things are very, very correlated. So you're looking for inefficiencies, edges, breakdowns. Okay, that's what you're looking for, right? You're looking for edge to appear, and you shouldn't have a gazillion different indicators for that to work, right? Maybe I'm wrong. I haven't seen that I am yet. Lucky number 7, stop trading, or at least know when not to trade. Guys, trading, if you look at really great traders like Lance B or some of these really big swing traders, most of the time they're not trading. Trading isn't like going to a 9-to-5, right? At a 9-to-5, or if you're a blue collar person, you can put in extra time and you get paid per hour. Trading is one of those things where you don't get paid per hour. In fact, you really only get paid per trade. And the downside to that is that you could also lose money per trade if it's not a good trade. So more often than not, most of the time there isn't a good trade, which means that if you're trading a lot, most of the time you're losing money. There are actually only a few good trades in a day, which means by definition, just if you think about it, if you're putting a lot of risk on many times, or putting risk on many, many times, you're actually more likely to lose money. It just makes sense. Again, if there's only 2 good trades in a day, right? And those 2 trades show up at 10 a.m. and 2:30 p.m. and you're taking a trade at 9, you're taking a trade at 9:47, you're taking a trade at 11, you're taking a trade at 3:37, you're taking a trade at 3:45, you're taking a trade at 12:45. You see what I mean? You are losing money. So you need to be trading as little as possible. I promise you, the less you trade, the more money you will make. Tip number 8. Gotcha. There's only 7 tips in this video if you were paying attention. That is it, guys. Now, this video is short and to the point, but these are actually super duper important. If you actually write these down and implement them in your system, use a tool like TradeZilla, and ask yourself every single day, am I using or am I following a very simple rule set that will keep me alive in the markets? So many of you guys are overcomplicating what trading is about. Trading is really, really hard, right? But the hard part about it is controlling yourself. It's self-control, not doing things. It's putting in the work to figure out and have edge in the markets, right? Stop chasing indicators, stop over trading, stop getting into, tit for tats arguments online with other traders. Find people who are good, high quality traders, get a good little pod, trade and make money. Track your performance and you'll be all right. Also, last thing, subscribe to my channel. See ya.